following is an update and technical analysis on gold futures based upon the 240-minute interval, and I believe we've reached some critical junctures within the technical realms of the commodity here. One of the most popular commodities of the year. Huge sell-off there at Costco, just big-time buying. Central banks, you name it, all in favor of buying gold as an inflationary hedge. And as Chinese markets tumbled on fading stimulus hopes, U.S. stocks stood pretty strong, while the Nasdaq outperforming and small caps lagging behind. Treasuries were pretty mixed, with the short end seeing gains and rate cut expectations turning more hawkish, where a modest dollar spike shook gold here. Nice clean red candle close. One of the more formidable 240-minute closes we have seen here in quite some time. While crude oil had one of its worst days since November of 2023, Bitcoin slipped right below 62,000 as well, erasing yesterday's gains. And now with the hotly anticipated Thursday's CPI data drop, Q3 earnings, and the looming election right ahead around the corner, the markets brace for the next wave of catalyst, an additional beautiful divergent high with multiple major reactionary highs really across that entire sphere. Put in a negative RSI divergence, the moving average divergence, price percent oscillator, and then obviously stochastics on all four key technical momentum indicators, only increasing the odds of a potential breakdown and sell signal. And that's where I believe we got that sell signal on a complete red solid infused candle close below the primary minor reactionary uptrend line off the mid-November reactionary lows there. And that was sort of back tested, and we have been in which we would call a primary downtrend. We are in a price action stage of a near-term downtrend with this primary reactionary downtrend line in correlation of its 50, 240-minute interval moving average. You have a ton of resistance up above in name of the 2650.39 price resistance. Major reactionary lows really across that entire sphere with some additional minor reactionary highs. And that will be the big resistance levels for short sellers and or bear traders to continue to hold in and hone in on that key level on a revisit of the major primary reactionary uptrend line, call it of the year, the most pivotal technical pivot point off the beginning of August, major reactionary lows. And that is going to be a big telling for any active and or day traders. If I've continued to hype up this primary trend line support level in my previous video, and we had that reaction, especially if you're an active and or day trader, netted you in a single day on 0.7. That is almost a full percent swing to the upside. A very telling beta and swings and a volatility of that magnitude for a commodity, especially gold. Make no mistake about it. Within the gold markets, volatility is here. Short sellers, bear traders, they want to see a continuation on a retest of this primary reactionary downtrend line. And that would be the biggest key pivot point for long traders and or bull traders to hold really at all costs to avert a technical induced breakdown sell signal, especially on a solid 240-minute red candle close, to go on to re-challenge minor price support level at the 2660 level. That would be the most telling. 2611.63 with the 2660 range as the 240-200 moving average. Call it a duo price support level that long traders would need to hold really at all costs to avert additional margin calls, forced liquidation, stops to go off on a complete meltdown right back to the top of the trading range that we had caught off that primary big breakout, with long traders taking that key inflection out on a buy signal, taking that level out. That was extremely bullish, especially if you're continuing to follow these key technical levels. It was good for a 5.5% move to the upside, as we could caught some of the bigger and larger moves off this beautiful cup and handle bullish formation pattern. That was in my previous video as well. Nice clean formation, had that breakout, and it was about almost call it close to a 9% move to the upside off that key inflection point. Long traders, bull traders, they want to hold this key inflection point really at all costs to avert a technical breakdown sell signal on a revisit of that key inflection point, on a potential revisit to go on to retest the 2650.39 price resistance level, ultimately taking that level out on a solid additional candle close to go on to re-challenge your dual price resistance level off the minor primary downtrend line. And that will be the biggest telling point in confluence of the 2665.70 price resistance and the 240.50 moving average. Call it a triple transitioning line of resistance that would need to be taken out really at all costs by long traders. Short sellers and or bear traders beginning to panic and sell off their position, only fueling a potential short squeeze, near-term short squeeze to the upside, only catching an additional fury of buyers on a bigger move to the upside, only increasing the odds of a much larger rally and re-entering all-time record highs and escape velocity.